Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock with news. Supply chain stress is threatening the global economy in a fundamental way now, and weaker American consumer sentiment isn't helping. The rise in American inventories is starting to become concerning, although much of it is just being caused by price rises. Still, even if retail inventories were only up 1.7% in May from April, they're up a sharp 17% from May 2021. Wholesale inventories are where the real problems are, up 25% year on year. Congestion in shipping, rail and warehouse supply lines haven't really eased. The prospect of an inventory correction has to be rising. There could be $250 billion in Essex stock in their supply chains, $150 billion in wholesale channels and $100 billion in retail channels. That represents about 1% of US economic activity, so any pullback would be noticeable, even if it isn't huge. But worldwide, it is a very much larger problem, and that is where the real risk lies. The weekly Red Book indicator is an early view on American retail sales, shows them tracking little change with no real sign of any slowdown on this front. But the Richmond Fed factory survey does show a problem, confirming what the Dallas Fed survey indicated yesterday, that the top is off new order levels and future prospects don't look as bright in June. And the widely watched Conference Board survey of consumer sentiment in the US in June has turned negative too, near a 10-year low. You would expect this negativity to show up in retail sales activity soon. If not, the mood turn is entirely political, not economic. Will the US Fed change its tightening course? Michael Burry thinks a retail bullwhip is coming, and they will. But overnight, senior central bank speakers in both the US and in the ECB doubled down on their inflation-fighting purpose. In China, senior officials are exhorting farmers to bring in a good grain harvest, an unusual move that probably indicates some concerns about food security in light of Russia's invasion of Ukraine. The US Treasury 10-year yield starts today unchanged from this time yesterday at 3.20%. And the price of gold is at $1,821 an ounce in New York and down $2 from this time yesterday. But oil prices are $1.50 a barrel higher at $110.50 a barrel in the US, while the international Brent price is now just over $113.50 a barrel. And the Kiwi dollar will open today a half a cent lower at 62.5 US cents, against the Australian dollar with 3/4 cent lower at 90.3 Australian cents, against the euro with little changed at 59.4 euro cents. That means our trade-weighted index starts today at just on 70.5 and down a further 30 basis points. Kia ora, I'm David Chaston, and that was 90 at 9, brought to you by interest.co.nz.